What an exciting week. A lot of action. Our guys have been trading. We've been catching moves. While the market has basically have gone nowhere, right? We're basically trending in a box that will show you in basically the same range all week. Now, range bound is very good, which means you have a defined entry and exit point on every trade. You know where your support is, you know where your resistance. You could take your entries. The only thing we always tell everybody, be very cautious. We have been saying there was a VIX player that is playing $35 calls into November. We got mighty close. And what happens? VIX goes up, it expands your option. But when VIX collapses, you get IV crushed. So you may be in the right direction, but your option basically gets crushed, right? Hence IV crush. So you want to take something like a calendar spread. You want to take a debit spread, a call spread, depending on the direction that you're going, whether it's at support or resistance. But you want to be very cautious. What I tell our team, above 18, I trade shares, right? Because if I'm correct, it doesn't matter unless I'm doing futures, which are not affected by the Greeks as much, right? Prices are just absolute. If futures go up, prices go up. If futures go down, they go down. But a lot of people like to trade SPY options because they move a little bit better. You can track them 9:30 to 4:30. You don't have to watch them after hours, which I totally understand. It's not the easiest thing, and it's not the most nerve calming situation when your position is moving 24 hours a day. We do track futures with our AI model. We just don't trade them. We give them to our members, and they can trade them on their own. But we wanted to kind of show you where we were, what we've been trading, what we're looking at, because we still have that dark pool at 675. And we have some dark pools I don't even want to mention that are like end of the world dark pools, right? Where do we go? Who knows? But this bouncing in the middle of nowhere is great for intraday trading. Our AI model does give us different time frames. So our guys are taking the right positions at the right time. OPEX is a day that we don't like to trade. Why? Because options go nowhere, right? Market makers are rolling off options and buying new options, and you have VIX collapsing on a Friday, which means we're not going anywhere. So I usually recommend OPEX. Go cash or trade the equity. You're not going to make as much trading in equity, but you're going to be very calm. You're going to make $2 or $3, $4, $5. That's fine. Take the win. Why gamble with an instrument and a tool that's going to have you basically poor at the end of the week? It doesn't make much sense if you're making money Monday through Friday and then you're broke by Friday at close, right? The key is trade 1 or 2 key days, stack your gains, and win in the long term. You don't have to win every day. You don't have to trade every day. But if your entry comes in every day, go ahead and take it. If your resistance level hits, go ahead and take it. Our guys, we do a lot of risk management. We wait for the opportune. I don't need to be early. I need to be correct. If I miss 5, 10%, but I made 20, 30, what do I care? Right? What do I care? I don't, because I'll take 20, 30, 20, 30, 20, 30 forever. And I'll stack my gains. I don't need 1,000% runners. They're few and far between. So take it one step at a time. But let's look at the market. Let's see where we are. So if you look at this level here where we had said, hey, there were no more dark pools above the 672. So we knew all of this was basically baiting liquidity. We came all the way down. We trapped at around 646, which I said, hey, we're going to come down. Our AI trigger was 657, went way below it, which is fine. But we knew that once that came down, we were going to recover because market makers were going to have to cover their short into OPEX. So anything below the 10 SMA is a long, because again, we have a new dark pool print at 675. When that hits, who knows? No one knows, not even us. And we're using some phenomenal AI models. But if you can see from here to down here all week, this is one big range. We've gone nowhere. All of this to here. So this box, let's just say down to here, this box to here, we've absolutely gone nowhere, right? This section right here, then we'll bring this box up. All this sort of beautiful box here is a nothing burger. We're trading within a nothing, and even lower, because we haven't broken past this 670 range, right? So I could even lower this almost and bring it, sort of to this area. This has been our box for well into this whole week. What does that tell us? Eventually this has to break, right? The AI model has us to the downside on the longer time frames, right? So on the daily, and on the 1 hour, we're downside. But I tell our team, don't short after some sort of pullback. Why? Because the market makers are more likely to cover, squeeze everybody, collapse the VIX, makes equities go up, and then you're shorting down here, you're shorting every candle, and then you're eating your short. I want to short at 675. Maybe 669 is a good area to short if you guys see something come up. So let's just say here at this close, which we had said to our team, 665 was our target we had from here. The AI fired off. As soon as this candle hit, the AI fired off. I said, we're going to go to 655. We smacked a little bit over it. 665.51 was the exact trigger, but I like my round number. 665, I told our team, I'm liquidating, but I didn't go short because the AI on the lower time frame has not triggered any downside. Did we reject? Yeah, but look at this little trap right here. They rejected at the close, took profits, and there's, again, at the closing, someone's buying it. So again, I want to see, do we get to 669? I really want 675 so that I can resume my short here. I'm buying very, very small dips with my long puts. Why? Because the VIX player is still holding for whatever he's holding for. That market maker knows something. And our VIX AI is very, very bullish to 35. At 35, then I'll close all my puts because that's the end for me. But again, when I look at patterns, I keep looking at these. These look like little inverse head and shoulders with this dip here. The AI keeps saying, hey, go long, go long. Okay, well, if the AI is going long, we're going long with it. Now, it's not a perfect inverse head and shoulders, but again, the AI has not reversed on the smaller time frame. And on the larger time frames, it in fact is saying we can go to 669. And on the daily, it's saying 675 to reshort. In other words, all of this is short covering. Most of this is not any market makers, doing any major buys or anything like that, because we keep getting the taco trades with soybeans or whatever the taco trade is. We try not to get into that because at the end of the day, it doesn't affect our trading. We're watching the dark pool. Dark pool defends, let's say the 650 area defended. We went up to 665. 669 is a dark pool level. Sorry, it's an AI target that we have on a larger time frame. And then on the daily, we do have the 675. Now, we all know that on the daily chart, that is a bear flag. But can it break out? Absolutely. Bear flags break out all the time and bull flags break down all the time. Now, more than likely, bullish patterns have a 70% success because the market goes up 70% and only goes down 30%. So I always err on the side of bull, right? Even on the smaller time frame. So we're taking our small scalps during the day, our intraday puts, our intraday longs, and just being smart until the daily gets where we want. When we get up to the 675 area, we'll do the same short that we did before with some logic because we do have on the monthly and the weekly, we have some AI triggers that are still saying 7,400, but we don't have any dark pools to support that. The dark pools aren't saying that, but the dark pools level held, the 650 held, 651, the 660 held. So as far as these time frames go, we're bullish. Every time we're above a print, that's bullish. Now, obviously, the bullish case is if we turn, let's say, 7, this area 673, let's just say 675 comes in, but we turn this area into support, then we stay long, right? Anything that turns into support, that's technical analysis 101. Don't short when we're going up. You short when everybody's bullish, no one's hedging. VIX is under 1612. When VIX is low, you buy your protection because that means that protection is cheap. If you want any more information, please like, subscribe, or comment for any particular tickers. If they're actionable, we'll send you the link is there to buy any particular tickers. Or if you want to join the Discord, we'd love to have you. We're winning with risk management, and that's the key. The key is not to get every penny, every trade, is to manage risk and take your wins. Good luck and have a great weekend.